Good afternoon, everyone, and welcome to this webinar in our Ideas for Your ISA series. Today, we're turning our attention to Vietnam, one of the most exciting Asian emerging markets, which in fact is scheduled to be upgraded from frontier to emerging market by FTSE this September. Shortly, I'm going to hand over to Tao and Toyan from Dragon Capital, and they're going to talk to us about Vietnam Enterprise Trust, or VAIL, and the outlook for Vietnam. Before I do that, just a reminder that we have about 25 to 30 minutes for the presentation and then lots of time for your questions. Please ask your question in the box on the right of the screen and I'll put those to the presenters at the end. I think Tao first, I'll hand over to you.
Actually, thank you very much, Thomas. I will go first. My name is Thuyen Nguyen. I'm a product specialist at Vietnam Enterprise Investment Limited. I'm here with Thảo Ngo, who is the co-portfolio manager. So I am dialing in from London and Thảo is dialing in from Ho Chi Minh City, which is now at 7 p.m. Anyway, thank you so much for joining us today. I know that there's a lot of things going on geopolitically in the world, so we really appreciate your time. I will start with spending 5 to 7 minutes reiterating the Vietnam investment thesis, i.e. why should investor consider having Vietnam in their ISA, or maybe even their children's ISA, because it's a very compelling long-term economic story. And then I will hand over to Thảo, who will talk about the development in equity market. And most importantly, she will update on portfolio performance and strategy looking forward. So in terms of macroeconomics, the economy is firing on all cylinders. And why do I say that? So first of all, recap on GDP growth. For the last couple of decades, Vietnam has achieved around 6.5% per annum GDP growth. But last year in 2025, GDP growth accelerated to 8% for the whole year. What's more is if you look at the four bars on the right-hand side of this chart, you see that it started slowly at 7% and then accelerated quarter on quarter, ending at the last quarter at 8.5%. And this provides a strong momentum going into 2026. And that's very important because in 2026, the government has set a target for 10% GDP growth. Now that sounds very ambitious, especially speaking from the UK, where we're looking to achieve 1% GDP growth, right? But in Vietnam, it is possible. We at Dragon, our research colleagues have looked into this, and we realized that this target is within reach. And why is that? The Vietnam economy will continue to rely on the three engines, which is trade, consumptions, and investment. Let's go through them one by one. I start from the bottom. So trade. Trade has traditionally been the driving engine of the Vietnam economy. For the last couple of decades, we have become an export powerhouse and a manufacturing hub exporting to the rest of the world. We have achieved important success, like now Samsung produce more than 60% of their handset in Vietnam and export to the rest of the world. And Apple suppliers have relocated to Vietnam from China in increasing number in the China Plus One movement. We now have more than 30 Apple suppliers operating out of Vietnam, etc. And on the export supply curve, we have climbed up the value chain, moving from agriculture products into higher value like electronics and manufacturing for important global brands like Nike, Lululemon, etc. So trade will continue to be an important engine. In fact, last year, 2025, despite Liberation Day and all the tariff tantrum, tariff is now settled down to 20% and export last year in Vietnam, from Vietnam, grew by 17%. So looking forward, we think that 12% growth year on year in trade is completely achievable. But important as the trade story is, looking forward to the next 5-10 years, Vietnam's economy will be increasingly driven by domestic factors, such as the other two engines I'm going to talk about, consumptions and investments. Consumption, Vietnam is supported by a very powerful demographic advantage. Let's remind ourselves that Vietnam is a very populous country. It's got 100 million people population and very young. The average age is 34. We will continue to have this golden population structure for the next 10 years. And as the middle class is expanding rapidly and becoming richer, the consumption last year grew at 8%, but we are seeing that with the strength of the economy, with increased consumer confidence, in the next 5 years, 11 to 12% growth is achievable. Now, finally, on investment, this year, the government is, and last year actually, there is a very ambitious public investment program by the government. There is a new airport that is in the outskirts of Saigon that is due to start at the end of start operating this year. There is a high-speed railway north to south that is being planned. Total value is 65 billion US dollars. That's going to take, in the beginning, we thought 10 years, but now maybe 7 years to complete. That is being planned. And there are highways and infrastructure programs everywhere in Vietnam. If you go there and see it on the ground. And this is supported by a government that is in very good fiscal health. Debt to GDP, government debt to GDP is less than 40% currently. And in 2025, for the first time in a while, we had a budget surplus, i.e. the government has taken in more in taxes than it spent. So all these three engines, trade, consumptions, and investments, are all firing on all cylinders. And we are looking forward to this year with a lot of optimism. And just to, the last thing I would mention is that the 10% GDP growth that we are targeting is obviously a completely different paradigm compared to the previous 6.5% over the last couple of decades, or even 8% in 2025. But the most important thing that is going to enable that is supportive government policy. In fact, what is happening now in Vietnam is a big program of reforms, the biggest program of reforms for the last 40 years. Just to remind quickly, the first program of reform was in 1986, and that was to move Vietnam from a centrally planned economy into a free market economy and open it up to trade. And now, starting last year, actually, the government is embarking on a second đổi mới, in the first đổi mới 2.0, where they are putting the private sector at the front and center of the economy. So not just allowing, but empowering the private sector. And that is what we, and they have done quite a lot. For example, streamlining the bureaucratic machine, reducing the number of provinces, reducing the number of ministry, cutting the government workforce by 20%. So, and all of that has created confidence in the ground amongst consumers as well as amongst businesses. And the most important thing is that the man behind it all has been reconfirmed by the National Assembly earlier this year in January. That means a stronger mandate for reform, and that means strong foundation for this economic growth that we are targeting. So I hand over to Thao now to talk about how all of that is going to benefit the equity market and also portfolio performance and strategy.
Thanks, Ms. Thiang. Afternoon, ladies and gentlemen. My name is Thao Ngo. I'm the co-portfolio managers of VEL. So next, I will present about the Vietnam equity market and also the VEL portfolio. So as Thiang mentioned earlier, that Vietnam has entered into a strong reform wave. It's also including a strong deepening in the equity market. And equity market has become a more important source of capital for Vietnam economy. As demanding for higher growth, we also need a lot of capital investment to support for the growth. And given the current status that the bank credit is still a key capital provider for the economies, the government wants to strengthen and deepening the equity market and corporate bond market to have to get the financing for the economic growth. So that's why this is the target, also the aim for the government to upgrade the Vietnam equity market into the emerging market status, and also for the credit bond, like to achieve the investment grade in the coming time. So as we mentioned early at the beginning of the webinar, that Vietnam will be upgraded by FTSE to the secondary emerging market by this September. And the next step will be the MSCI. In terms of the size and the liquidity of the Vietnam market, we are qualified to be included in emerging market status. There are just only about two technical issues, which is the foreign ownership limit and the central counterparty clearing system to be upgraded into MSCI. So the government already set a strong target for Vietnam to be upgraded into MSCI emerging market by 2030. So in conclusion, we think the FTSE upgrade is a near-term catalyst, while the MSCI will be a longer-term one. Talking about the market performance, last year Vietnam index has been increased quite impressive at 39%. It is the best performance in Asia. Whether this strong momentum will continue for the coming time, we think we have a high hope for that. Especially it's driven by a stable, strong earning growth. This is our forecast for the earning growth of the top 100 company in the Vietnam stock market. We project the earning growth for this year will be around 19%, mainly driven by the large cap, and also the mid cap will deliver much higher earning growth at 21%. Explain that the earning recovery has been happened in a wider base. Talking about the valuation, given a strong earning growth of 19% and recent market correction, given the global headwinds, the valuation of Vietnam looks kind of attractive compared to other regional peers in Asia, with the price to earnings of 11.3 times. So with this stable earning growth and attractive valuation, is create a compelling opportunity for long-term investor. So in summary, and in another thing is another interesting development theme in the Vietnam equity market is that we have a strong IPO pipeline. Has been happened from last year and in the next 2-3 years of the estimated value of $50 billion. That means there will be a lot of new investment opportunity for investor in the market, and the opportunity are quite diversified across all of the sectors, from consumer, infrastructure, healthcare, and technology. So this strong IPO pipeline will also create a more diversified sector in the Vietnam equity market. So for the summary for the equity part, the Vietnam equity has been entering into a new era of growth, supported by the strong economic growth, as I mentioned above, and more importantly, with the deepening in upgrading the market, potential upgrade into the emerging market. We hope that there will be more inflow from foreign investor into the Vietnam market this year, and with the new wave of IPO and the private deal will present more opportunity for long-term investor. Next, I will make a quick introduction about VEL. VEL is a flagship fund of Dragon Capitals and also the biggest fund, one of the biggest fund in the Vietnam stock market. Currently now we manage around 1.3 billion sterling. The fund established in 1995 and we listed in London Stock Exchange in 2016, a member of FTSE 250. They'll provide a long-term assets for investor to the Vietnam equity market. We focus on the listed and the pre-listed equity only. We don't do the private equity. And the portfolio is quite diversified between the large cap and mid cap name. The net return of VEL since the stock market inception in the year 2000 is 11.3%. This is the VEL performance last year. Our NAV increased more than 25%. Moreover than that, the share price of VEL increased much higher at 39%. This also thanks to the NAV increase, but also the active share buyback to manage the discount. And also recently, we introduced the tender offer mechanism. Last year, our board of directors has been very active in the share buybacks to manage the discount. We has been bought back around 12.9% of the outstanding share, and the discount level has been narrowing down from 20% to currently around 11 to 10, and currently now around 13%. And the board of directors set the target to manage it down to a single-digit number. What is the investment theme for the VEL portfolio? We try to reflect the Vietnam economy growth driver into the portfolio, which play via two key themes. The first one is the domestic consumption, supported by a strong middle class formation in Vietnam, which is now around 30 to 35% of the population. With the rising wages and also strong domestic consumption growth, estimate at around 11 to 12%, it will be a strong growth driver for consumption. Another important theme is the infrastructure in Vietnam. It has been a key theme for this new growth driver. With the government has spending a lot of money to build a new road, highways, airport in Vietnam. We also capture this theme in the VEL portfolio. In terms of the sector allocation, to play these two key investment themes, we invest in some sectors like for consumption, it will be banks, retailing, and brokerage. While for the infrastructure, we will invest in residential property, energies, and metal. The bank is a big part of the VEL portfolio because it's also the biggest part of the Vietnam equity market in general. We expected the bank will deliver high earning growth this year, around 20%, mainly driven by the strong credit growth from 18 to 20%, and also a increase in the net fee income. For the bank, we just invest only selectively in 6 to 7 banks out of more than 20 listed banks in the stock market. And we put a lot of more focus on the private bank who have the full ecosystem beside the traditional lending activity. These private bank also have provide all the modern platform like the wealth management platform or the gold trading platform or the crypto trading platform. So these banks are the most active and dynamic bank in the industry. For the retail business, this is the highest conviction sector in the VAL portfolio. We have 5 times overweight in these sectors, which mainly driven by the strong domestic consumption. The next is the brokerage sectors, which is we think it will benefit from the Vietnam equity market upgrade and the increasing liquidity in the Vietnam stock market. For all the sector in infrastructure will be residential, energies, and then material construction. This is the snapshot and the portfolio metrics. VAL have around 45 holdings in VAL portfolio. It's quite diversified between the large cap name and the mid cap names as we try to capture all the potential growth in the stock market. And the portfolio is trading at the price to earnings of 11.4 times, with the earning growth for this year expected at 27%. The top 10 holding, which show here, occupy majority of the portfolio, more than 52%, while the tail end is in the other large cap and mid cap name. Our biggest position is Mobile World, which is the biggest retail player in the country, and the company has been benefit from the increasing domestic consumption, but also the transition from the modern trade to from the traditional trade to modern trade in Vietnam. So in conclusion, VAL is quite well positioned to capture all the Vietnam high growth driver in the coming times, and with the domestic focus and strong earning growth and the reasonable valuation, we think VAL will provide a long-term assets for investor who want to invest in Vietnam. This is the end of my presentation. Thank you. Now we open for the Q&A section.
Great, thanks very much both for your very interesting slides. There's a few questions already that have come through, but if you're in the audience, please do keep them coming in. We've got plenty of time, so don't be shy. The first question is about corporate governance. Can you tell us a bit about what corporate governance standards are like, and are they improving?
The corporate governance in Vietnam has been improving since the stock market in Vietnam has been operate more than 20 years, and we do see improve in the quality of the corporate governance. For example, all of the listed company in Vietnam now, for the board of directors, there is independent board of directors, and they also follow a quite strict regulation about the corporate governance in terms of release the information, release the quarterly result, make a quarterly meeting with investor, and also they publish all of information in timely and in English.
And we had a question, which I'll read. Historically, it's been difficult to remit profits out of Vietnam. What is the current position?
In Vietnam, for a local citizen, we are not allowed to transfer the money out of Vietnam. However, for other businesses, I think they normally can do that efficiently if they have, can provide a sufficient paperwork and proof that the money is for doing businesses.
Yeah, can I add to that, please? From my understanding, I also understand that repatriating profit is actually has not been a problem from Vietnam at all. We haven't heard of businesses having difficulties repatriating profit. In fact, one of the things that that attracts so much FDI and companies setting up in Vietnam is the ease at which companies can set up, and also repatriating profit. It has, for FDI businesses, for example, they have repatriated most of their profits out. And in fact, one of the things that government is thinking of is obviously in a very friendly way to create some incentive for them to keep some retained profit in the country. And this is something that is being in this new wave of reforms, right? Government is looking at ways to encourage technology transfer and know-how transfer, so that local companies can learn and can get up the curve that would enable a broader economic participation in the FDI story. So what that is telling us is that currently the repatriation of profit is not difficult. I'm really interested to hear more if you want to share more on that.
Okay, thanks very much. We have a couple of questions about the current hostilities in the Middle East. So how is it going to affect the Vietnamese economy, particularly if the Straits of Hormuz stay closed, particularly if energy prices remain elevated? So how would this impact the Vietnamese economy? And is this reflected at all in your positioning in the portfolio? Do you have any assumptions about energy prices, or how are you viewing this?
Yeah, thanks, Thomas. I think it's a very valid question given the conflict in the Middle East. So Vietnam, like other Asia country, we are the net import of the oil and gas, right? Given the rising in the oil and gas, our economists estimate that like any 10% increase in the oil price will cause the 0.4% increase in the inflation, which means last year we had 3% inflation in Vietnam. Is quite low level. But given the increase in the oil price, the inflation could shot up to 5%. So like 5% this year compared to 3% last year. So this means, however, if 5% is still under control, and so far we have been discussed with some company in the oil and gas sector, and lucky that they already secure enough of the volume for production in April. So there's not the worry about shortage of supplies for short term is not that much. Another impact could happen to the currency. Given the increase in the oil price, we think the Vietnam dong could depreciate further about 2 to 3% toward the yen. So that will be the impact on the macro economy. For the equity market, so after the conflict in Middle East happened, the Vietnam equity market also see the correction of 15%. So given the correction, the price to earning of the Vietnam stock market had dropped from 13 times PE at the beginning of the year to currently the current level of around 11 times. So what we has been doing in our portfolio recently, we has been raising more cash and also we have built more some position in a defensive name to place defensive. And another thing is we reducing some companies that have high leverage, as we expected that the interest rate might see the increase in the coming time if the conflict in the Middle East may last longer, which cause the pressure on the currency and also the interest rate.
And can I just add to that as well that Vietnam is, yes, we are a net importer, but also that Vietnam has actually quite a diversified sources of energy. So only about 20% of our energies come from oil and gas. You have another 30% from coal, 30% from hydro power, and about 20% in renewable. So the jet fuel sector is the one that's going to be most affected, because Vietnam Airlines, for example, they import about 2/3 of their jet fuel requirement. So that could be impacted. But like Thao said, the VAIL portfolio has already been holding more cash for more to jump on any opportunities. And also it's important to bear in mind that Vietnam has diversified sources of energy and not completely reliant on oil and gas, which is only 20% of energy supply.
And doesn't Vietnam also have some offshore oil reserves too? I think the government's trying to liberalize the licenses in that sector. Is it possible this will give some fresh impetus behind those reforms? Could that be an interesting area of growth?
Yeah, I think given the conflict in Middle East, the government also tried to diversify the source of import gas. So recently, I think the government has been working with other countries like South Korea or China and also like Russia to diversify the oil input to secure for the volume production in Vietnam.
Yeah, and looking out to the medium term, you would probably see fresh impetus on pushing the renewable energy sector as well. The Vietnamese government has made a zero carbon neutral target by 2050. So this would probably be another factor pushing them to invest more in the renewable sector, because we have quite a lot of wind and solar energy already, and actually it's an area that it presents a lot of opportunities for British companies coming to Vietnam. There's a lot of cooperation already in that sector, and hopefully it will get accelerated because of this.
So VAIL doesn't currently pay a dividend. Is that something that has been discussed or considered? Is there a rationale for why there's no dividend at the moment?
Yeah. So firstly, because Vietnam is a growing, strong growth economies, and the company in Vietnam mostly they reinvest the earning to open the capex or the capacity. So normally the dividend yield in the Vietnam equity market is also low, just around 1.7%. So that's why though we don't have yet the dividend policy in the coming time, but I think the board of government, the board of directors is also reconsidering about it.
So we had a question about tariffs. I know you did discuss a bit last year's tariffs. Maybe could you tell us a bit about how they have affected the economy? Have they been absorbed? Has there been any impact? And the question is asking if we should fear any new Trump tariffs, that could impact the economy.
Yeah, chị Lan, you take this?
Sure, absolutely. So, last year was a very eventful year in terms of tariffs. So we started in April with Liberation Day, where President Trump announced 46% reciprocal tariff on Vietnam. And the reason for that tariff was because in 2024, Vietnam had a massive trade surplus with the US, so about 124 billion US dollar surplus. So on Liberation Day, Vietnam was the victim of our own success in terms of exporting to the US, right? But the Vietnamese government very quickly went to the negotiating table with a very constructive attitude. There was no talk of retaliation or anything. They immediately, actually, after Liberation Day, the next day, the General Secretary sent a delegation to the US to start negotiating. So with this constructive attitude, Vietnam managed to become the second country in the world, only after the United Kingdom, to announce a trade deal with the US in July, where the tariff was lowered to 20%. So, and with that, we were back on competitive ground compared to our other to other manufacturing peers. And what's more important is that with the same level of tariff, then Vietnam is advantageous because all the factors that made us attractive before and become a obvious destination for the China Plus One movement is still there, i.e. a big demographic advantage, very well-educated and hardworking workforce, friendly government, business-friendly governments and policies, and also a big consumer market, right? So it's all still there. So Vietnam is still was still competitive, and export numbers through the year was rising month on month, and it bore out the fact that we were still competitive. And of course, now the latest is that after the Supreme Court in the US ruled the Liberation Day tariff to be illegal, we are on the 15% global tariff like everybody else, and that's bring us back to the very competitive position that we were before Liberation Day and before all this tariff drama. And in fact, last year the exports from Vietnam increased by 17%. So yeah, so the export story should continue strong.
Yeah, adding some colors on that. So last April, after the initial tariff was 48%, there was some month we see some delay and muted in terms of activity. But after the Vietnam government has been finalized the tariff number of 20%, we did see a strong recovery in the FDI inflow into Vietnam. So at the end of last year, the FDI inflow into Vietnam still increased more than 10% at 27 billion US dollar. And the PMI, the indicator for construction in Vietnam, also see a strong improvement in the quarter 4 and quarter 3 and quarter 4. And recently, the PMI number of Vietnam is around 52, yeah. So we do see a strong confidence coming back.
Yeah, and an interesting thing to point out about the Vietnam stock market with relation to tariff and export is that, surprisingly enough, for an exporting nation, the stock market of Vietnam is actually not directly exposed to exporting companies. This is because a lot of the exporting is being done by foreign direct enterprises, you know, like the Samsung or the Apple or other foreign companies. They are not listed on the Vietnamese stock exchange, right? So it was a problem because we could not access that. But then in times like this, it made us realize that the stock market in Vietnam is actually driven mainly by the domestic economy. In fact, only about 15% of the total revenue of all companies listed in the Vietnam index is directly linked to exports, and out of that, only less than 2%, right, is directly linked to U.S. exports. So in terms of the equity market, it is more, if it suffer from tariff, it'll be more like the secondary effect rather than direct effect. And in fact, I think maybe Thao, you might want to add to this, but in the sell-off, there was a massive sell-off in the stock market in Vietnam after Liberation Day, right? Because 46% tariff was very, very scary, and stock market hit the floor for 3 consecutive days after that. But it created a good opportunity for Thao and for the portfolio managers to pick up good quality stocks that we have been watching. So that opportunity was taken advantage of, and that contributed to VAL's strong performance last year, right? Because I think it's worth pointing out that last year VAL was by far the best performer out of all the Vietnam-focused investment trusts that's listed on the London Stock Exchange.
Yeah, thanks, Chị Thuy for reminding me about the correction last year. Firstly, the sell-off was from foreign investor were offset by also strong inflow from the domestic investor. It's worth to mention that the participation of the number of the retail investor in the Vietnam stock market had increased more than 10 times in the last 5 years, and that they come and absorb all of the foreign outflow who worry about potential impact of the tariff, the increase of the rate in the US or the tech stock in the US, that make them decided to take profit in Vietnam because the market is quite outperformed compared to the other market. And for VAL, we have been playing a long-term strategies. We do not trade a lot, but for those volatility in the market, it also creates an opportunity for us to invest or increasing position in some name that we would like to have more in the portfolio.
Right, I've got one more question from the audience lined up. I'll maybe make it last call. If anyone listening has a final question, please put it through straight away. What about gearing? So does VAL currently use gearing? And if so, how?
VAL have the loan facilities of $200 million US. However, we don't use it as a gearing tool. We use the loan facility just for the cash management purpose. As I present above, Vietnam has a strong IPO pipeline. of more than 50 billion US dollar. The cash, the loan facility is using for us to participate in the deal. And because the deal normally require a deposit for some time, and we lock up the money to do the deal while we are not rushed to taking profit from other position. So it work like a cash management tool rather than a grading tool.
Brilliant. Well, thank you very much, Tao and Toyan, for your presentation and for your very full answers to those questions. And thanks very much to the audience for your interest and all your questions. I hope that was useful. The presentation should be available on the website for you to watch again, and the slides should also be downloadable there. So thanks very much, Tao and Toyan.
Yeah.
It was
Thank
great
you, Thomas.
speaking
Thank
to
you, everyone.
And yeah,
Thank
I
you,
hope everyone
Thomas.
has
Thank
a
you,
great rest of your
everyone.
day.
Yeah, have a nice afternoon.
Bye bye.
Have a nice afternoon. Thank you. Bye-bye.